Okay, I'll start out, and then you can come on through. Be just one moment. Let me just do a little house cleaning right here. I kept the name still listed as Dale since it's his show. But everyone, welcome to the Face webinar. Dale's off today. Welcome to President's Day. Blake's also getting a little bit of rest. He's a little bit under the weather, so it's going to be me, Steve, and Stelios. So welcome to the Face webinar. Let me just move this out of the way.
I just passed you the screen.
I'm sorry, what'd you say?
I just passed you the screen, Polly.
Oh, you did? Okay. Do you see my screen right now?
Not yet.
Okay, hold on one moment.
It was on me and I had it on pause.
Okay, hold on. There we go. Okay, folks, once again.
Now we can see you.
You can see it. Okay, great. And welcome to the Face webinar. As I mentioned, Dale's off today for President's Day, and Blake's a little bit under the weather. So it's going to be me, Steve, and Stelios. And I'm just giving the introductory part here. We do see the dollar weakening, continue to weaken today, and the euro. One of the headlines coming across, obviously, is that it's all about the U.S.-China trade talks, that they're getting some a boost, as they say, from sentiment coming from there. And we had the webinar earlier today. It's called the European Crossover Webinar, and that starts at 3 a.m. Eastern. 3 a.m. Central Standard Time, 4 a.m. Eastern. We covered that. Actually, China State TV was broadcasting that a key principle had been agreed upon. So that's adding to that, sentiment, giving the dollar a little bit of a dip, and euro and other currencies being able to move further higher. So we'll just cover a general quick overview where we stand for today, and quickly move into the analysis, and then I'll have Steve and Stelios step on in. So where I do my analysis is in the you can see it right here, and we have the analysis going across with ForexAnalytix, and obviously all the different contributors, whether it's Greg is Steve, Blake. Everyone has their own area where they like to focus on, whether it's harmonics or Elliott wave. For me, myself, I stay here on the basic technical. So as we're moving into today, we did for the euro, and I put on here, the euro came back on Friday after stops were tripped sub 1250. Downside target has been 1219 with short-term support 1234, discussed Friday on the European crossover webinar that did hold. The market spent the rest of the day testing the resolve of late shorts. One area of note has been the reference to the last 2 days on the webinar between the spread between the 9 and 27 EMAs. And so we're going to get to that, and then we'll actually cover some of the other currencies also. So looking here on the daily, now click this on. Now I can reload this up. Man, it's taking a little bit of time, not sure why. Try and get back to where we were. I'm not sure why.
You need to minimize that area, Polly.
Oh, minimize. Oh, okay. No, I did right. Oh, there. Thank you very much. Okay, I don't even use that area. No wonder I couldn't find it. Thank you for the assistance. Let's go on and get into the euro right here. One of the things that we had noted over the last few days last week, what I use is on my exponential moving averages, and generally I only use those on a 30-minute to just give me a short-term momentum. And one of the things I was explaining on the earlier webinar, the other guys, have their analysis a little bit more longer term, medium term. The analysis that we have here on the European crossover, which we have a bias chart set up, is for the support and resistance levels for that day into the next 24 hours. You can see right now our resistance from the European crossover webinar earlier this morning was 1336 for the euro dollar. We've gotten as high as 1334. Okay, but getting back to the euro, is one of the things that we had mentioned last week was the spread between the exponential moving averages. The last time we'd seen this spread here was when we saw the euro make that run for 1569 and then subsequently have a pretty decent little sell-off. Well, as the spread had widened here, we had seen this market start to turn around, look like things were starting to get going. And the very next day, everything, went to heck in a handbasket. But we came back when we got the U.S. retail sales, which came in far weaker. And as we came into Friday, we tripped those stops below 1250. It looked like, okay, we're ready to, push lower with a terrible close for the week. And we started to come back in here, and we got a little bit overdone. We came right back, and we spent the rest of the day, as I said, testing the resolve of the shorts, and we were looking for what we call in the chat room, I was mentioning an uncle area of 1302. We made it up to there. I think we got up to 1306, and we backed off. Not a whole lot, but one of the things that we were looking for today, and we mentioned here, at least for the bias chart, our resistance is coming in at 1336, is basically a reversion back, if you want to speak of, is you can see the disparity or the spread between the two exponential moving averages is just as wide, if not even a little bit wider than it was here when we saw this big reversal. Now, I'm not expecting a big reversal, but I do expect this thing to even itself out a bit. And our initial resistance for the day is 1336, but I think we can actually come up to around 1360, and that's without the dollar really pulling back off, quite a bit. Let's go and pull this back, and we'll just take a look where we stand here with the cable. So with the cable, we said the cable rebounded from 2787 level, confluencing with 2796. That's a 50% of this recent move of 2374 to 3216. The market is closed lower 8 out of the last 11 days, so a bounce is plausible. Additional daily resistance comes in at the 2889 area, confluencing with the downtrend at the same price, followed by 2953. Well, 2953 is actually going to be our bias chart resistance for today. So we move into the cable. Not quite the same move as the euro, but you can see, as I mentioned, 8 out of the last prior 11 days were down, down, down. So we ended up holding here at the 50%, which was also a pretty decent little level also. And we've since, rebounded. We've just gotten just above this trend line. Well, that trend line resistance comes in at 2889, but we are looking for resistance today, bias chart resistance, initially coming in right there. All right, there we go. And we have that listed right here at 2953. Just coming in right there, just above that little area. You get some good volume here coming across. So that's what we're looking for this to push higher. Now, although they're expecting or began to get good news coming out of the China trade talks, probably going to keep this bid up, but at least on a quiet President's Day, that's essentially what we're looking at right now. To move on to a couple other interesting markets per se, we're not going to cover them all. I want to give Steve and them a chance, but just give you a little bit of flavor of what we do on the European crossover. We're going to move into the gold market, the XAU. So it says the gold market, gold XAU closed strong. The market has positively diverged during the dollar buying. The market appears poised for an upside challenge of 1358. Support is 1304. Well, one of the things that we'd focus in on the European crossover really actually been for several weeks. Let's get this back here. Has been the way that gold has held up so well. 1267 was a pivot, and when the market began to rally up here, we were struggling back and forth, trying to hit bust out of that 13 area or trigger the stops. We had an initial target area here of 1304, and when the gold started to turn down a bit, we thought, okay, well, if we do pull back, I don't think we're going to pull back very much, but I think that we'll find a lot of buying here at 1267. Well, we didn't even get to the 1267. And so once we started to come back up, we adjusted our level, our target level to 1323. You can see this key level coming across. And certainly that's where the market went to. And that 1323, right there, all that volume coming in, happened to confluence with the 78%. Well, we didn't get much of a pullback from the 61%. So you're thinking, okay, we'll probably get a reasonable pullback from the 78% when you consider how well the dollar had been doing. We barely came back to our initial support area, which was 1304. So here we are pushing higher. It's the same thing across the board, is that it's all about what they were saying earlier was that, with the China talks going well, the demand for dollars is coming down even lower. So at this point, I think that this is what we're going to eventually make a run to, is this 1358. Now, as far as bias chart for today, the bias chart support, or resistance, I should say, is going to come in at 1334. And our initial resist support is going to come in at 1314. So we're looking for a move here in the gold market to eventually get triggered if we do see that dollar pullback. And certainly we have a catalyst now with not only the Fed paring back, but we also saw weak retail sales come in on Thursday. We certainly have at least the kindling wood to get a move going here in the dollar. Certainly has been fighting it all along here. And then just to touch back on one other currency pair that recently started covering ourselves in the European crossover webinar, has been on the let's go and pull this here. Has been on the dollar peso. And we'd done some work on Thursday. We'd seen a pretty nice move here in the dollar peso, and that just happened to confluence here with a level we were looking at for 1946. Well, actually 1945.7, but the 1946 actually was 161%, which we use the fibs quite a bit because my work is all short term. It's like I said, for the next 24, 48 hours, maybe 3 days stretch. And so when we did that, you look here, that took us right there to the 161%. So we had a great confluence there, and we saw a pretty good significant sell-off. We're actually thinking that if we go and get much further, we're looking here on the daily chart, we can see a pullback here that we're looking at for 1911 into a 61% back of this move here on the dollar mix. So move it, like I said, it can be a tricky market to go in and cover, and we're starting to focus on that. But I'll tell you what, you really have to stay on top of this one because it moves quite a bit. Other factors that do move it, and one of the factors that can go and move it, and we'll touch lastly on that, is going to be the crude oil market. And we've had, crude finished up very strong on Friday, actually far stronger than what I would have even expected myself. And we'll go and quickly finish up with this, and then we'll turn it over to Steve and Stelios. We had been looking here. We saw this come right to the tick, to the 38% previously, and then rotate lower. But we came back with quite the vengeance, and really we're targeting at this point now, it's going to be 57.18 for the initial target. Once again, our focus is very, very short-term work, but initially, right here, which is today's buy chart, we're looking at this 56.05, where you've got a little bit of volume coming in. We've had a pretty good run already with the crude oil, and I'm thinking, well, if it's going to go on and pause, which it got above that earlier today, it actually had gotten as high as 56.24, but That was our level to focus on, which is the 56.05. And you can see here, we've had quite the run here. We may go on and take a little bit of a pause at down that 56.08, but just taking a quick look-see over what we're looking at right now, that pretty much captures what, although we cover most of the markets here, not most of the markets, but I'm saying we cover pretty much most of the majors here, including crude oil. We do look at the Aussie yen and the bunds and the DAX. But the work that we do here on the European crossover that I do is very short-term oriented. Like I said, the levels that are in place are pretty much for the day on out 24 hours. Sometimes I expand just a little bit beyond that. But I'll go on and bring in Steve if he wants to go on and make some comments. Obviously, it's going to be a very quiet day, a relatively quiet day with President's Day upon us.
Hey, Paulie, I think Steve is actually on a call. So okay. It's okay, I'm gonna take over for a bit, and when I'm done, if he has any comments, he's probably gonna jump in.
Certainly.
So, okay, so let me take the screen first of all. All right, so sharing, change presenter, and I am Delios. All right. So not much actually has happened since Friday's Face webinar, but we had some developments out of the UK. We had actually some Labour MPs who are basically leaving the Labour Party, and I think they're going to start their own or whatever they're going to do. But basically, they showed 7 Labour MPs basically said they're going to show their discontent with Corbyn's Brexit handling of the whole Brexit thing. And you know, it's funny because Theresa May has been, it looks like she has like 9 lives, because she's been all through all of this. It's been a shambles, and she's still polling ahead in the polls, ahead of Labour. And now with this this little breakup, it certainly doesn't harm her chances. So she's still in there, and she has now only a few days until the next vote, which I think is at the end of this month. And she has a few days to bring in some kind of a deal that might get some support from Parliament. But given the European Union's inflexible stance, I really don't know what she can do, because the main problem is still the Irish border, and the Europeans have made it quite clear that there is no changing to the backstop or anything like that. So, you know, let's see, they're still politicians, so things might change, but let's see what they're going to bring. And I think also May is due to meet with Juncker from the EU, I think. So, oh, Steve is back as well. So, you know, there's going to be a little bit of a late flurry on the UK side, trying to salvage something or to do something. I have no idea what they're going to come up with, but it's definitely going to be choppy for sterling for the next few days. That is for sure. Now, in terms of the dollar and you know, what I think will happen to the dollar, I mean, this has been my view on the DXY for quite a while now. I'm bearish on the dollar in the medium term for many reasons. You know, the economy is still producing $1 trillion deficit every year, and the Trump's tactics, they are aggressive.
We already surpassed 22 trillion. And the fun part is that within the same year, we will also surpass 23 trillion.
Yeah, there you go.
Of national debt.
Yeah, I mean, the United States is still, you know, the world's biggest economy. They're producing, you know, a lot of stuff, especially in the in technology and, you know, services industry. You know, they're still the most important economy in the world, but, you know, it's I think we're going to see, we're already seeing a slowdown. And like Steve, you have very correctly said, even when people were thinking probably that you were mad, that we were going to have a recession much sooner than people expected. You know, GDP was running at, you know, really good levels and everything was fine. And you were saying that, and even myself, I was thinking, you know, this is a bit punchy, but it looks like things are turning, and I think you're going to be proven right. So
yeah, I think so as well. But you know, don't forget that the U.S. used to be just a few years back. I mean, a few decades back, the world's biggest creditor, and it's now the world's biggest debtor. So
yes.
it's a long way from one side to the other, right? And unfortunately, I don't think it's as easy to actually reverse the situation again. So I don't know. I'm really skeptical and really worried about the health of the U.S. economy, because of course it's going to have a huge impact on the global economy as well. There's no question about it.
Absolutely.
So Stelio, besides the usual British drama, which honestly has become so boring, I just want this drama to be over one way or the other, so we can go on, with our regular lives, just looking into what stupid things the central banks are going to be doing, etc., etc. So, do we have anything else? I know that today is a very quiet day. We don't have any news coming out. Anything during the weekend that has happened?
Really, not really. No. Oh, my dog thinks so. No.
Millie thinks so. Yeah.
No, really, nothing. I'm afraid. We had the Jesus Christ. We had Spain announcing that there's going to be snap elections at the end of April, but really, that was it. Not much for me.
Some statements from Italy as well. We had, huh?
Yeah, we had one of the Italians saying that the European Union either has to change or Italy will leave. So Borghi out of Italy. I mean, this is just big words. You know what the Italians are like. So
absolutely.
I don't put too much stress on that.
Absolutely. Okay, Stelio, perfect. So let's see what we have. Okay, not much is happening, but there are a couple of things I definitely want to cover. And obviously, we don't have an interview today. Dale is not in the house. Let me take the screen. There we go. So one thing, and I never thought I'm going to say that, but you all know that I'm long Ethereum. I said it since last week. So I'm long Ethereum from this little triangle, and actually this has been an amazing move. I mean, I've already made more than I made with oil. Which is a good thing, because I still have my short position in the S&P, which dwarfs the Ethereum trade, and I still intend, actually, especially since I've had two great trades this year, I still intend to keep it, because I do think that there is a very, very, very big divergence between fundamentals and expectations, because what is driving this market is expectations. For example, in this case, expectations due to the U-turn we had in the Fed's policy. In my opinion, it's not going to matter that much in the medium to long run. It's not going to make a big difference in what's going to happen. I think that we already see the beginning of the end of this business cycle, so I'm not expecting anything to fundamentally change. I do believe that we are headed into a global recession, and the US is not going to be an exception to that. And I do think that valuations remain extremely, extremely rich. We've already started seeing a lot of evidence that we're going to have disappointments there, and we're currently also on a nice confluence of resistances. So personally, of course, it helps that I've made two great trades this year, so I'm very positive. But I'm not really worried about this short. I don't think there is a fundamental reason, and there's going to be enough momentum to. Yes, Telio?
If you look at what the markets are doing, it's actually comic at some point, because really especially the US equity markets have been driven by the US-China negotiations, and every time you have a positive statement out of the US, stock markets go up. Then there's kind of either a denial or it looks like it was just talk, but stocks don't come down, right?
If you remember, I made this comment to Blake some days ago. I told him this is the gift that keeps on giving. In all honesty, They should hope that there is no resolution to this, because first of all, I'm pretty sure, I said it the other day as well, that if we get a deal, and whenever we get a deal, considering how much of a positive aspect has been priced in, there is absolutely no chance in my mind that that's going to be that good. So there is a huge chance that we're going to have the usual case of buy the rumor, sell the news. So that's one point. And second of all, they'll have to find some other kind of rhetoric with which they should start trying to drive the market higher. So I do believe that the best thing they can do is sustain, the positive rumor mill that, yeah, we're going to have a deal, it's going to be excellent, everything's going to be okay, and keep postponing it, because I believe that when it's done, the market is going to probably sell off because the deal is not going to be anything good. So S&P 161.8% fib here. I'm also monitoring this ascending channel, and obviously a huge level is this 28.12. Previous triple top in this area, also previously support before that, and the 78.6 from the all-time high to the December lows. Keep in mind that even if we want to put things in context, we've moved 19% higher since the very end of last year, which is already like a huge move. So any way you look at it, some type of a pullback is needed. My cost average is at 26.80, but I honestly, as I said, I don't feel pressured by that. I do believe that this is simply a squeeze that has no real basis for it to happen. So I do believe that we're going to have some kind of a sell-off. Now, I'm going to stay to the 4-hour chart simply because there's not much moving today. So it's a good opportunity for us to have a closer look at what the markets are doing in the short term. This is the Dow Jones, a very, very strong recovery as well. But you can also view this as a wedge, right? This is the Nasdaq. Nasdaq, a much, much better textbook-looking ascending wedge here with clear loss of momentum. You can see the RSI divergence as well on the 4-hour chart. There are two possibilities here, in my opinion. One possibility is this, and the other possibility, which is, the usual pain trade, is going to be, people shorting here, then getting another jump higher. People really getting frustrated and, abandoning any hope for a short position to work, and then rolling over from there. So, and the IWM has been by far the weakest one on the way down, and now it has been by far the strongest one after some point in momentum, at least. The rest of the indices, especially S&P and the Nasdaq, are showing some, loss of momentum to the upside, but, oppositely, the IWM has actually accelerated somewhat. Still, though, we're roughly at the 61.8% fib. 4-hour RSI now at 81. So I guess, we should see some type of a pullback as well. S&P remains, in my opinion, the most clean price action to read, that one and the Nasdaq at the moment. Now, I wanted us to have a look at the pound and the pound pairs, because I posted that in the chat room earlier. Both the pound and the cable and the GAPI are actually showing some bullish signs here. I was monitoring this move lower that is clearly channeled. So the move lower so far doesn't look impulsive in nature. At the same time, we had some clear RSI divergence here in the 4-hour chart, and we do seem to be attempting to break above it here on the 4-hour chart. And at the same time, the pound against the yen is testing resistance of another channel, which also, even this channel actually looks even more corrective in nature than the previous one. Very little retracement despite the decent amount of time that the pair has spent consolidating here, right? So I wouldn't be really surprised if we do break out from this confluence of resistances. I do think that we can make it higher towards the 78.6% fib at 145.50. At least, from a technical perspective, this looks more or less, a textbook scenario of, price action that wants to keep on pressuring to the upside after a period of consolidation. Now, let me also open the question box and see what we have here. Blake and Dale are going to be with us tomorrow, by the way. No sound on YouTube. Stelio, can you write to...
I've already done that.
Hello. Thank you, mate. Not sure why, but the sound is not working on live YouTube. Okay, thank you. Reports of no sound on YouTube. Thank you. What are my thoughts on Gappy? Oh, I actually didn't see that, but I did answer it regardless. Does the US slowdown contribute to slowdown elsewhere? Absolutely, Eric. Absolutely. Especially keep in mind that economy is all about expectations. For example, it's a little bit of an unrelated conversation, but it's related to what you say about contribution in slowdown. The economy is a lot about expectations. It's not by accident that the Fed and, no central bank has ever predicted a recession, right? Ever. I mean, people are having fun with central banks all the time. I'm doing it as well all the time. Like, they're so good they can't even predict a single recession in the history. It's not that they've not been predicting some of those recessions. They have. But what are they going to do? They're going to go out and say, listen, we're most probably, are about to enter a recession. If they do say that, because, the economy is a lot about psychology, they're probably going to make a bad situation worse. So they're at a very, tough situation that they can't be honest, because being honest is actually going to hurt the economy more, because it's all about expectations. As I said, not all about expectations. Actually, that's mistaken. But expectations do play a big role in human behavior, because we're always looking forward, right? I mean, you're assessing what's going to happen in in the time ahead. At least the time you feel is more predictable, usually like 3, 6, 9 months, maximum a year, and based on that you take decisions. So, for example, we know as a fact. That's why, by the way, economics are a social science, right? Because it's all about the human psychology and how humans react in a market, right? So, for example, it's a given that if your boss tells you today that you're going to get a nice raise, let's say in a month from now, you're probably going to treat yourself well and start increasing your expenses today. Oppositely, if you're afraid that next month you might be losing your job, you're not going to wait for next month to actually cut down your expenses. If you're even decently prudent, you're going to do so today, right? To get yourself in, let's say, a more prepared situation for what's coming tomorrow. So yes, especially if you want to see the factor of expectations, absolutely it contributes, because there is nobody on the planet that thinks that the US, for example, can go in a recession, and the rest of the planet not going most probably in a recession as well. So yeah, it plays a huge role. Steve, if we're going into recession, then wouldn't you invest in gold? I am invested in gold. I have physical gold. By the way, Steve, I'm not too far from you. Just look eastwards to Izmir. Smyrna, okay, Amit. From where are you short, Steve? I can't see that in the active patterns in play. Martin, as we've said many, many times, in the patterns in play, we do not publish everything. For example, being short the S&P is a counter trend trade. So I wouldn't want to, in essence, indirectly propose to ForexAnalytix subscribers a trade that's more risky. So usually, us, the contributors, decide to post on ForexAnalytix patterns in play trades that we feel more confident about that we feel that they are more mainstream, okay? Because, we care for the performance to be better, and because we understand that some of you might decide to follow them. So, we would only want you to follow, the trades that we feel more confident about. So, this is a counter trend trade. That's why I haven't made the pattern in play. And as I said, my cost average is at 26.80, so I'm 100 handles out of the money. what do you anticipate in oil pricing if stocks correct and drop lower? Thanks. Depends. Definitely, we know that there is a very strong, let's have a look at oil, by the way. We know that there is a strong correlation between crude and how stocks perform. And I have to say, I'm a little bit troubled here because there are two ways you can look at crude. One of them is that we've already broken above a bigger inverted head and shoulders formation. Okay, so, this one, right? This one. On the other hand, I would like to see a deeper correction, right? And I am also monitoring this expanding triangle here. So despite seeing this breakout from here, I'm not that much convinced that crude is going directly from here, to the next objective. I think it might be trying to trap people being long in the worst possible spot, then perhaps getting rid of the weak longs, with a bigger corrective move lower towards 49 and a half, 50 before actually resuming higher. So, I'm quite cautious here with crude. I wouldn't be buying it up here to be very specific. I would definitely be buying it if we saw, a deeper correction lower, and I was looking for that. I mean, I was looking to gain long exposure in crude, but it never actually made it to retrace at a price that I considered reasonable for me to participate again, because I already made some very good money being long here. And, since it didn't fulfill my criteria, I just, stayed away from it. Now, on the other hand, I posted this as a chart of the day a few days ago. For those of you that don't know, ForexAnalytix has also a blog, right? And it's free for everybody. So this was the last chart of the day. Actually, I'm the one that wrote this. Here it is, Steve Vulgaridis, and I wrote here we were still in the bull flag. Gold has spent the last couple of weeks consolidating its gains in what looks like a bull flag. As long as it's holding above the 1300 support resistance area, another push towards the 88.6% fee, but 1341 is a high probability scenario. We consider a daily close above 1316 to be a strong signal that the bullish scenario is in play. And indeed, that's what happened. And I'm still looking possibly for a move towards 1340. It's the 161.8% extension of, this corrective move. And, up there, I would be looking for, at least a deeper correction, perhaps even a reversal. Now, silver is also breaking above an equivalent pattern, not as bullish as the one we've seen in gold. This is a pennant. And as I kept saying, silver is clearly underperforming gold. So gold was the preferred long in this case. But, irrespective of, their relative strength, silver has also broken above this formation, currently testing resistance. So silver might also appreciate further from current levels. Now, the reason I switched to copper, you can see it even on a 4-hour scale here, is because I was talking about this area for quite some time, and copper is now actually making it here. This is a rectangle in copper, right? And keep in mind that a break above this area of resistance is going to be probably worth 30 cents of upside, right? You expect that a breakout from a rectangle should produce, an extension in the direction of the breakout worth as much as the height of the formation. So pay close attention to this 286 area. We're getting very, very close to it. So, you have two options here, either shorting against, the highs and hoping for another rejection and remaining within the formation. But, if we actually break out, you don't want to be in the wrong side of this, because, it's not nuclear physics to understand why usually you get nice extension. The reason is because everybody that's been short has now been moving their stop losses, their position stop losses in this area, right? So once we trigger out of this area, we'll start stripping off those orders, and that on its own should be enough to produce some nice acceleration to the upside. By the way, Steve, I'm not. Oh yeah, I read that. What is your view on binary option trading? I find actually absolutely no reason why somebody should trade binary options. I'm not against options, and actually, if you know how to trade options, there are some very nice tactics, and options give you the ability to lever up. They give you the ability to chase after low probability scenarios with a low cost as well.
And also a known cost, right? You know your
at known cost. Yes, at known cost. They give you the ability to hedge an existing actual position, especially if we're talking about stocks or commodities or whatever. So options are very, very useful instruments. There is absolutely no question about them. But binary options, why using binary options? I mean, really, I find no reason. I mean, you can make money trading anything. There's no question about that. But I find no particular reason why you should be, looking into them. Your view on the Kiwi yen, it's showing a 3 drive on the 4 hour. Okay, let's have a look at the Kiwi yen. And actually, I anyhow wanted to talk about the Aussie USD, the Kiwi, so we can have a look at those as well. So Aussie USD currently testing. I'm monitoring this as a potential channel. I'm not saying that's going to be the case, but if that's the case, we're currently testing resistance. So I'm really interested to see what's going to happen from here. That's Aussie USD. Now this is the Kiwi in an ascending channel. Might be some kind of a wedge here. Also monitoring to see what's going to happen. I mean, you can even interpret this as a triangle. It's quite complicated, but I have to say that they remain very decently bid, and the same applies to Aussie yen. As you can see here, Aussie yen actually produced a very nice wedge. This was the chart of the day, another day, if I remember right. I anyhow proposed this, regardless, I proposed this trade on face. We did have a very nice breakdown from that wedge, but we did have a rebound following. We haven't reclaimed the highs yet, so I'm looking to see what's going to happen from here. Unquestionably, we remain very decently bid. Now, Kiwi following, the Kiwi yen following the Kiwi news has actually reclaimed the highs and has pushed to new highs. But I'm not really enthusiastic about the momentum higher. And keep in mind that this area, this 76.20 area, is an area of resistance. So I would be quite careful here. And you're right, you can interpret this as a 3-drive formation. You can also see that we have some RSI divergence on the 4-hour chart. Combining with the fact that, as I said, this 76.20 area is an area of resistance, I would definitely not be buying the Kiwi yen up here. But in all honesty, I do believe that there are better trading opportunities out there than trying to understand and position yourself in those pairs, not yet at least. Can you explain the business cycle and why is there an expectation the market will drop? The business cycle, you mean in general how a business cycle works? It's a product in a big extent of credit, in a very, very big extent, and it's a product of extremes. I mean, business cycle, the growth part always begins after a period, of depressed prices, of a big sell-off, of pessimism, and then the economy starts. After the economy, in essence, comes in, surpasses the equilibrium in the other side, because usually we have, especially since we got the central banks getting involved more and more in running an economy, we get more the phenomenon of boom and busts. So usually we have booms that expand a lot more than what should be considered an equilibrium, and busts that oftentimes bring prices a lot lower than the equilibrium would excuse in essence, right? So what happens is you start with pessimism, and economy starts growing. People are still not, very sure, and then you get more growth. Unemployment dropping. Inflation. Picking up a little bit. Depends on, of course, how the economy functions, and asset prices, etc., etc., and then picking up, and then at some point this comes to a point that the fundamentals can no longer. I mean, people get more credit, and credit is a big function of what happens in the business cycles. And at some point, the economy, comes to a pressure point that you can't squeeze any more growth out of it before you get some kind of a recalibration, let's say, and then oftentimes you get some kind of news or some trigger event, and then you go into a recession. Usually, on average, we have like business cycles that last roughly, let's say, 7 years. You get, let's say, 5-6 years of growth. You get like 1-2 years of recession. Rinse and repeat. It's normal and natural. Unfortunately, as I said, it has become a lot more extreme in its extents, because mostly because of the function of central banks. Because in essence, central banks have been stopping the economy of functioning freely, more and more. They're trying to actually prevent downturns in the economy, which is successful in the short term, but creates huge imbalances, which at some point inevitably create, a huge bust. Can you please analyze the EuroCAD? Yeah, absolutely. Let's have a look at the EuroCAD. There we go. Okay, EuroCAD. I'm quite troubled with what's happening here, right? I mean, it's riding this trend line resistance as support. So as long as that's the case, I wouldn't be surprised to see a jump from here, admittedly. But on the other hand, as you see, price action has not been that clean, right? So I wouldn't be really involved with that. But for what it's worth, 149.50 is an area of support, and the risk reward would favor longs against the previous low. If we do break below this area, then we have this 147.40 area. I'm pretty convinced that if we actually break below this area, we're headed there. So there's going to be at least another couple of 100 pips of downside from there. Steve, hi, what do you have? Eurozi. Let's have a look at it. Eurozi, here it is. Depends on how you want to look at it. In the short term, you can say, okay, we had a move higher, we had the channel move lower, we broke above it, and we still remain above the channel. But on the other hand, if you zoom a little bit out, you'll see that, Eurozi hasn't really been doing more or less anything, right? I mean, we are drifting slowly higher, but in a very, very, very choppy fashion. And we're currently more or less in the middle of the previous move. So personally, I would just, hold tight here and wait for more evidence before I did anything. Euro-Kiwi more under pressure here, you can see it. Euro-Kiwi looks more bearish, unquestionably, and we've talked about that. Aussie-Kiwi has actually broken to the downside. So if you're looking for strength, you should be looking at Kiwi. So for example, if you're looking at weakness in Euro-Aussie or Euro-Kiwi, Euro-Kiwi should be your preferred short. Euro-Aussie should be your preferred long if you're looking to trade one of those two. Hi, Steve. Looks like a cup and handle that Kiwi yen for our chart. Euro yen. Okay, let's have a look at the Euro yen, and I'm going to go back to the Kiwi yen. Okay, Euro yen. This looks to me like a corrective move. Clearly, I mean, as long as we're trading in this channel, I would expect that a failure lower is a more likely scenario than an acceleration higher. Okay, as simple as that. So this is the channel I'm monitoring. Now let's go back to the 4-hour chart of Kiwi Yen. Yeah, you're right about it. Somebody can interpret this as a cup and handle formation. And let me show what you're looking at to our friends here. Cup, handle. This is a continuation formation, which by definition should extend to the upside after a breakout, for an equal amount to the height of the formation. Okay, so you're right. If we do break above this resistance that we were talking about, 76.20, that's going to be quite a bullish breakout. Good eye. See, we covered Euro Yen. Okay, I think I covered more or less all the questions. Let me see if there are more things I wanted to show before and I forgot. Okay, we talked about copper as well. Let me show you the DXY is one of the things I want to show. Let me remind you that we said that we have a nice loss of momentum here in the DXY, and it's worth noticing because candlesticks sometimes are very good indicators of a turn. It's worth noticing, and I wrote that in the weekend analysis, that on Friday in the DXY actually we got a key reversal. We pushed to new highs momentarily to actually close lower than the previous day. So we do seem to be getting some follow through. And even if you look at the chart like this, a pullback towards the breakout of this trend line, which means towards 96.20, doesn't look unlikely. Actually, we drew this last week, and it looks good to me. We broke below this ascending channel, and a deeper correction for the USD does look like a possibility. As long though as we hold above 96.20, I wouldn't be, jumping on this, because this can, just prove to be, a corrective pullback. I did cover both Aussie USD and Kiwi. You can have a look at it at the recording afterwards if you weren't here since the beginning. So today is a holiday. Happy holiday. I'm pretty sure we're going to have a quiet trading day. Regardless, if something happens, we're going to be issuing updates. Just let me remind that we're going to be in New York for the Traders Expo, right? You can just sign up for free if you follow this link. You can sign up for free for the New York Traders Expo, 10th, 11th, 12th of March. And if you intend to be there, just also subscribe here so we know that you are coming, because we're organizing some get-together afterwards. It's not only for ForexAnalytix subscribers. So if you're listening to the show, if you want to meet us in person, you can visit us there. We're going to be happy to get to know you. Also, let me remind you that if you want to, have some kind of a change in your broker, please visit our reimbursement page. You can there, decide to contact through Skype or through the email. Trent, Justin, and the rest of the team, they can definitely help you out, make the best choice for your brokerage firm, and without any cost. You can also get rebates or subsidize your ForexAnalytix subscription. So thank you all very much, and we're going to be in full force here tomorrow with Dale and Blake. Have a great evening, afternoon, depends on where you are. Bye-bye.